Our market monitor tonight is cautious, especially compared with our prior guest, Art Hogan. But that's what makes a market, after all. Charlie Smith expects stocks to be flat for the rest of the year. He says, though, that investors can still make money. He's going to show you how. He's Chief Investment Officer at Fort Pitt Capital Group and also Portfolio Manager of the firm's Total Return Fund. Mr. Smith, welcome. Good to have you with us.
Thank you for having me.
Our earlier guest, Art Hogan, has a year-end target on the S&P 500, about 100 points or more above yours. You see it basically flat, 1938, or thereabouts. Why the divergence? Why the different opinion?
Well, I think the big issue is earnings, where we think earnings are going to be. Our estimate for earnings for the S&P 500 this year is about 5% under the consensus. You put a 17 multiple on our $114 earnings number, that gets you to 1938. I have a feeling that Art's number is probably a little bit closer to consensus than ours.
Mm-hmm. You've said that you have a couple of stocks in the energy space that you think can improve by 20% or more over the next year or so. So let's find out why and which ones. What's the attraction with Kinder Morgan, which has been kind of stuck in the $30 range most of this year?
Right. Kinder Morgan is a very large energy pipeline and oil and gas pipeline company. They have 80,000 miles of pipeline in the U.S., the biggest in the U.S. 25% of the stock owned by Richard Kinder, who's the CEO. Really, the opportunity here is to take advantage of moving all this shale gas that we're producing at record levels in the U.S. over the last 6 or 8 years. And the opportunity for Kinder is yield. They pay a 5% dividend. And the company says that they're going to grow that dividend to the tune of 3 to 5% per year over each of the next 2 or 3 years. So we think the stock could move up to $40, plus you're getting a 5% dividend yield while you wait.
Your second choice is Chart Industries, but as you point out, candidly, it is down from about 130 into the 70s now. What's the catalyst going to be to turn this stock around?
Well, we've been patient with this one. We began following a couple years ago under $100. It got to 130, as you said. It's now back in the low 70s. They should earn around $4 next year, maybe $5 the year after that. They've seen a slowing in their growth this year, partly due to a slowdown in business in China. They're a big overseas operator. But their main business is infrastructure for natural gas processing and natural gas transportation, and that business is growing quite nicely. So I think there is a growth opportunity here. The stock symbol is GTL.
Okay, it seems like we just had a little technical problem there. That was Charlie Smith with Fort Pitt Capital Group. And his third stock, by the way, was Axiall, AXILL, which is trading on the NYSE.